Well, sweet Jesus, it happened. The inflation report came in higher and higher. It was going up last month, but now it's broken through 4%. Well, we're screwed. Bond yields took a jump. Fixed rates are on their way up. Tiff Macklin's scratching his head, reaching for his anxiety pills. I don't know what he takes, Xanax, whatever he takes, I don't know. But there's some anxiety going on with inflation in Canada. Here's the deal. Anybody who doesn't drive a Tesla, gas prices are way fucking up. They are up. Gas, diesel feeds everything. Every bit of food, everything in transport travels on diesel or gas, except Tesla. But those are the lucky guys. But what does it do? Inflation going the wrong way again. I mean, we might get out of this. We might get out of this without a Bank of Canada increase in October. But Jiminy Crickets, if there is another inflation print up from 4, like 4.2, 4.3, holy moly, there's going to be some fireworks at the Bank of Canada. Tiff will be taking double doses of the anxiety pills. And bottom line is, he'll probably have to go up in November. Now, what is the important thing here? What is the really important thing? The important thing is, as always in the last year and a half, fixed rates. What's going on with fixed rates? So, up and up. Had this whole discussion in the past. It's really simple. The farther away that the bond market feels the cuts will come, the farther distant, the farther in time, the farther off the cuts will come, means higher bond yields and higher fixed rates. And that's where we're headed right now. Rates jumped 16, 17 basis points this morning. We're already seeing some increases from lenders, 15 basis points, 10 basis points. It's already happening. So what's it mean for the consumer? It's just bad because the source of 38%, is it 32, 38? It's a big number. Big number. The source of a ton of inflation itself is higher mortgage rates at renewal, higher mortgage rates on the variable, and higher rents, because no matter what guys tell you, I don't give a shit what they think, okay? You'll hear people say, no, I don't think mortgage rates really affect rents. Bullshit. They affect rents. They absolutely affect rents. And rents are through the roof. I mean, we're hitting records every month on rents in this country. Look, it's bad. It's really bad. Inflation, you might remember very clearly, our finance minister, Krista Friedland, was softly patting herself on the back in July. Inflation dropped below 3%. And she was happy, telling everybody inflation's licked. Canada's done the best job in the G7 beating inflation. Well, she found out what Paul Volcker found out. Now, the reason I talk about Paul Volcker is he's even bigger than me. I mean, Paul Volcker was like a giant of a man with a huge gut like me, and like he was 6'5". He was a huge guy. And he was the Fed governor, the U.S. Federal Reserve governor, during the time of the highest inflation in the history of the United States. And he broke inflation. He did. He kept raising rates till inflation was broken. But here's what happened. Halfway through, he paused. And he thought he had inflation beat. He paused his rate increases, and inflation came roaring back, hard as hell. And after that, he just put the pedal to the metal, rose rates through the roof, and that was the end of inflation. Took a little bit more time, but it was the end. So now what happens? Central bankers don't want to make a Volcker mistake. They don't want to pause too long and have inflation come roaring back. All this circles back to Tiff Macklin, the Bank of Canada governor, having to think harder about raising rates in October and November, which is bad news for everybody with a mortgage in this country. Everybody with a mortgage renewal, everybody with variable, everybody with a HELOC, home equity line of credit, all bad news. Now, when will it stop? when the recession hits. When does the recession hit? Things are looking a little wobbly right now, but there's no sure things yet. All I can say is this: 4% inflation in Canada, bad news. Bad news. Not going to look good for the rest of this winter. Not looking good.